If you're only looking as broadly at the trades that you're doing for the charts that you're trading and investing in, you're already in a lot of trouble. You must look much more widely. For example, the US2, the US10, the DXY are throwing dangerous signals to main markets and also the crypto market. You must be aware of how to handle this and what to look for. Is it the time to take profits? Let's run the numbers. We can see that US liquidity is starting to be injected into the market. This typically means that when we get an injection of liquidity, which is this green line, which will be available inside the service from next month, we typically see the markets come up. Let's have a look at the structural levels on total crypto market cap. Currently, total crypto market cap is $2.512 trillion. When we look at the structural levels inside the market, the crypto market has a lot of overhead structural resistance, especially the alts. When you get a big accumulation of structural overhead resistance, it's really difficult for price to get through it. That's why it typically comes down to the structural levels below in order to challenge it again. This is why it's critical to know where these structural levels exist in the market. If we're not going up, we're coming down, so it's a really good forward radar. All markets are intercorrelated and interconnected. We saw recently that Bitcoin decided to come down. It's currently trading at 68,388. But as always, where are the levels? Let's just pop them on. You'll find if you don't know the levels, the markets will mercilessly take your money. As we've seen across the weekend, structure plays an incredibly important point. As we saw down around the 66,700 mark, there was a lot of structural support and there was more structural support below it. Structural support acts as a safety net. It doesn't act as a brick wall. It's not necessarily going to ping back up like this. Typically, when you get a lot of negative momentum, it will go sideways, do a bit of a dip, and then come back and see if it can challenge. So far, inside the market, we're seeing a degree of positive momentum, but we know total crypto market cap has enormous overhead structural resistance. This may mean that Bitcoin absorbs the flows and the alts start to bleed. This is why it's really critical to know your structural levels, and you can see the next structural level on Bitcoin is slightly above 71,600. It's very important to look through your cheat sheet. The Tier 1, Tier 2 and Tier 3 charts give you exceptional guidance on where the markets could be going. And one of the ones that's important to look at is the S&P 500. The S&P 500 started trading in 1871. That's over 55,000 days ago. So let's put on the structural indicator to see where smart money is buying and selling. What you'll find are structural levels are just magnificent. They explain where price is likely to get stopped out and where price is likely to get reversed too. It's a very powerful methodology. When we look at the S&P 500, there is structural support at that 5109 level, and we can see we're just slightly above that. But we know the big question on everybody's mind, on all professional minds, what is the US2Y, the US10Y, and the DXY doing? The market fate will be tied to those three things. Let's have a look. One thing to bear in mind, the FOMC meeting will be on us in just a couple of days, and this is a time where things can get really bizarre inside markets. It can get really turbulent. We've seen global markets absolutely rally recently. Look at the Nasdaq, look at Bitcoin, look at Japan's market, Taiwan's market. They've all been going gangbusters. To get a bit of a retracement in here is just very likely. And literally, it's just part of normal market action. But of course, when we go through retracements, they're very unpleasant. Using the cheat sheet, we can understand that if the yields increase, such as, look at the US 10-year yield, it's going parabolic, the US 2-year, we've seen a bit of a basing action in the DXY, but the dollar-yen combo is showing that the DXY is gaining strength under the hood. Also, we've noticed that the Aussie dollar has been retracing, as has the euro dollar as well. If you're doing the cheat sheet, it means that there's negative price momentum just accruing on the major indices, commodities, forex, stocks, and also crypto. Also remember, the price is always moving in a wave. Just because the US 10-year and the US 2-year come up, that doesn't mean they're not going to go down, because they do. Therefore, at this time, you need to answer the question, and only you can answer the question. Is it time for you to sell, time for you to book some profits, or time to just let it ride and add to your position? The answer to those questions is uniquely yours. Nobody else can answer that for you. Also, it's a little bit different when you see signs of the yield strength coming through and signs of US dollar strength. You should be a little bit cautious. The markets are quite overextended at the current time, as you've just seen. As discussed in the last video, the DXY has been putting in a bit of a monster run, but we really need to know what the structure is, so let's have a look. Structure tells us so much. Okay, let's pop it on and check it out. One thing that we can see, the DXY is clearing structural support levels. It's once resistance and it's turning into structural support. If we have this fresh air gap, which we do unfortunately, the DXY could rally up just like we've seen dollar yen do, and the US2 and the US 10-year. So please be aware of this. This will place negative price momentum inside crypto and the stock market, and that will filter through to the futures and global indices and global markets. Coming across to the US 10-year yield, we can see the 10-year has been going up. It's trying to base. Now, will it come up or down? That's very much dependent on where the structural levels are. So let's pop on the indicator. The indicator literally gives you X-ray vision inside the markets. What we can see is the US 10-year yield found support just around that 427.80 mark and then made its way up through structure and was stopped out at 43200. However, the US 10-year yield has got more structural support below it than structural resistance above. And above that 43200 mark is a fresh air gap, which means there's no structure. And just take into consideration that the US 10-year yield has been trading since 1912. That's in excess of 40,500 days of data. So this positive fresh air gap inside the structure of the US 10-year is really quite significant. If the DXY moves up sharply, it's likely to pull the US 10-year yield with it. And we've already seen that the 10-year and the 2-year have been going for it. Therefore, we need to understand the 2-year direction. At the moment, it's quite positive. But what is the structure telling us? And we've got 13,000 days to analyze. Let's pop on the indicator. What we need to see is where is the structure. We can see a very similar thing. The US 2-year broke through structural overhead resistance and converted it to support. Now it's challenging this 474 level. It came up through this positive fresh air gap, and when you have a positive fresh air gap, it can come up very, very quickly. It's just mid-range at that 473 level now. But unfortunately for us, there's more structural support below the US 2-year yield than structural resistance above. What does this mean? Even if the 2-year comes down, it's likely to challenge this 4745 mark in the coming days. And it's important to remember the FOMC meeting is coming out, and during that time, markets go nuts. They get really turbulent. Yield strength is often reflected in decreasing values inside gold, and that's what we're seeing currently. Let's pop on the indicator to see where the structural levels are. Here with gold, it's been trading since 1833. We're literally looking at nearly 70,000 days worth of data. When we look at the structural level just above 2186, gold couldn't get through. If it can't get through, what's it going to do? It's going to come down to the one below. If it can't get through that, and you can see that serious rejection, what's it going to do? It's going to come down to the one below that. If we get positive momentum, it's going to come up and challenge those structural resistance levels. It needs to be able to just consolidate above it and move forward. If it doesn't, it's coming down to the one below. This is a very, very powerful rule of structural support and structural resistance levels. And the structure that we're talking about is CTKS structure, which is drawn over all of price history. If you're a gold bug and you see that gold is starting to cut below that 2150, that will mean that the yields are starting to come up. The US2Y, the US10Y, the DXY, dollar-yen combo, and we would expect the euro-dollar to come down, the Aussie dollar to come down. Also, the futures of the S&P 500, the NASDAQ, the Dow, the Russell, if these kind of things play out, always have your three-dimensional thinking. Cover off the up case, the down case, and the neutral case, no matter what price is doing. Why is that? Because price is always moving in a wave. Even over a long-term trend, we saw gold come down, but there are trading opportunities all the time inside everything if you know where the structure is. Now we can come back to Bitcoin and better understand what's been going on with the power of the DXY and the yields coming up and the dollar-yen combo showing us that the DXY could gain strength. We've been seeing that risk-on activity is decreasing. Tesla has been very hard hit with the increase in the yields recently. We need to check out the structural levels to determine if there are any positive or negative fresh air gaps. Our focus is always to understand structure. A lot of people can talk about fundamental analysis, and I wrote a book on advances of fundamental analysis and technical analysis back in 2005. The one thing that a lot of people don't realize is there is a big gap between quarterly earnings. In fact, there's 3 months. And also, all companies and all stocks and all cryptos obey business cycles and economic conditions. Those things are simply not reflected in the annual financial statement, or if they are, they're way, way too late. That's why we need to know structure. And we can see Tesla's structure around that 174 mark was very strong, and after it sold down quite significantly, of course it found its footing. But the problem is at 182 was rejected, and that meant if it's not going above, where's it going? It's going below. And then we had a breakdown in structure which got caught by the next level. You can see how powerful these structural levels are. When we see that it just broke through this 168, it tried to retest, but it was absolutely decimated. Where did it come down to? Another structural level at 162. I'm going to show you a little bit more data here because I think it's very important for you to know what could be coming up in Tesla's price structure. You can see we have a negative fresh air gap. If you're a value investor, you want to lean in or dollar cost average when the price comes down. That's the only way to DCA. So many people DCA on the way up. You should be DCAing on retracements and not at a fixed period in time. You're literally getting X-ray vision in here. You would have known at 162 there was a level of structural support if you were trading Tesla. Now, we need to understand that below 158, we've got a pretty precipitous drop down to 140, potentially below. If you love Tesla, this is the time to dollar cost average in. You don't want to be dollar cost averaging in when Tesla is going up in price. That lowers your profitability. You want to, in fact, be dollar cost averaging in at structural levels of support. Unfortunately, the vast majority of traders and investors don't know where the structural levels are, and this is approximately 5,000 days worth of structural data. If we look at this, if we break down below 162 and break down below 157, you know that there's nothing to stop Tesla's price from going down hard. But of course, don't have one specific ideology on where price can go. If we see that the yields are starting to come down, the US2, the US10, and the DXY, Anything is possible. You must keep your eye on the charts. That would mean when the markets open, Tesla would rally. But where would it rally to? Of course, the 168 mark first, and then the 171, and then up to the 174. You know exactly where Tesla is going if you have this X-ray vision. And these levels change by the month, so please make sure that you update your charts. And just to let you know, I've released lower boundaries on Tesla. The way that you update it inside your indicator is simply to remove the indicator, go to the invite-only scripts in indicators and just add it again. It is literally that simple. Also, the upper boundaries of silver have been added as well. Let's have a look at Solana. We can see Solana's price has been doing really well. But as always, where is the structure? Let's pop it on. The reason that we look at structure, it's so important to understand where the ceilings are. Because a ceiling will stop price appreciation dead in its tracks. So we need to also know where the floors are, because that's the high probability area to capture price when it retraces. And we can see Solana did really well. It came up to that structural overhead resistance. Well done, everybody who's been trading Solana. As we're coming out of the weekend, and out of the weekend in Australia, we're already in Monday, but the US and Europe are coming out as well. We need to bear in mind that the yields are going to impact price. If the yields start to decay, just keep your eye on the 2-year, the 10-year, and the DXY. If they start to come down, we would expect Solana to go up. But if the yields start to really go up, and don't forget the VIX is very suppressed at the current time. If the yields and the forex pairs, such as dollar-yen and the DXY, start to come up, the euro-dollar and the Aussie dollar start to come down, we would expect downward price momentum on Solana, at least back to these strong structural levels. That's why it's vital to know where they are. It's very important to have three-dimensional risk management playing out. Always have a strategy what you're going to do if the price comes down, if the price goes neutral or the price comes up. And typically we invest at spot, which means we want price appreciation. But if prices go down, you must have a strategy as to what you're going to do. And it can't be an academic one. It has to be practical. Always remember that you control the trade or investment, but the market controls the return. And you could be right. For example, if you get a retracement, you might say, ouch, this thing is going to zero. Never think that. It's just going to a structural level. If you know where the structural levels are, you can actually lean in and do very well. If you think something is going up in the long term, you're probably correct. But the issue is, as it gets there, it's going to be doing this. It's going to be going up and down, up and down. And some of these downs could be 20, 30, 40, or even 50%. That is where you want to dollar cost average in. The key is take profit along the way if you're a trader, and if you're an investor, dollar cost average in as price comes down. The one thing that you definitely don't want to do, and this is an amateur thing, everybody wants to buy the bottom. No such thing. If you think that the price comes up like this, yesterday's bottom, or last week's bottom, is just not the bottom that's happening right now. So just be aware of that. Don't worry about bottoms and tops. They make no difference. Professionals don't even care about them. Story-based analysis and perfect timing are things best left to other people who want to lose their money. If you can always remember Rule 4, and this is from an NFT from OpenSea, if you remember Rule 4, you're ahead if like literally 95% of other people. Prices are always moving in a wave is just the nature of every single financial market. And when you consider the price is moving up and down all the time, you can just look at it and say, this is just a wave up or a wave down, and you don't get too fussed as to what is happening. But taking profits is a pretty good idea if you're into that. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.